The biggest tech players are pouring money into AI CapEx, capital expenditures, with $650 billion expected in spending this year alone by the hyperscalers. Our Countdown closer says the opportunity is owning the companies already converting that hyperscaler spending into steady earnings and real cash flow. Joining us now with, I guess, almost as much as they're going to spend, $628 billion in assets under management, is AllSpring Global Investments Senior Portfolio Manager and Head of Growth Equity, Mike Smith. Okay, give me some examples of these companies you're talking about.
Hi, Liz. Look, they all stepped on the gas. That's the big story of the last 2 months. And one example in particular is Quanta Services. So the big bottleneck when all this $650 billion gets put to work is power. And getting these data centers connected is a big problem, and Quanta solves that problem.
Okay. You talk about infrastructure, the power grid. That's what people have been coming on this show and saying go to next. Or is it the ones who are already seeing return on investment in getting up to speed with AI?
Well, I think you can do both. Right now, investing in the bottleneck in power is profitable. Quanta's got a $39 billion backlog. They'll generate $1.5 billion in free cash flow. So that's happening today. I think as you look to the future, there's going to be lots of opportunities to find the businesses who are taking the AI and turning it into revenue and profit for themselves. So way downstream from the CapEx and the infrastructure, there are companies like RadNet who take AI and apply it to medical imaging and detect cancer at a rate of 20% higher or 20% improvement.
See, that is the kind of company I look at, okay, and I say that might be an interesting one. You're not buying it at the high, although over the past 6 months, it's gained marginally, just 3%, unlike, say, for example, Quanta, which had a much bigger jump over a similar time period. But where do you expect RadNet to finally catch the attention of Wall Street and investors?
I think it's like anything else when you're trying to size up an adoption curve. It's slowly at first and then all at once. RadNet is an overnight success, many years in the making. And the key for them is they're the largest at what they do, but they're less than 10% of the market. And so there's a huge opportunity as they establish a competitive advantage in their space. And I think that happens gradually at first, and then it accelerates over time.
You know, when you look at what's happening lately with the software makers, they got hit very badly. Then the truckers last week, C.H. Robinson got smacked because one white paper came out that said that AI could really upend the logistics world and do things better than the companies out there already. How do you make sure that you kind of maneuver around those potholes?
I think software is where to focus. That's where we've seen the most sell-off and the most damage in the last 45 days. I like to pick our spots there. I think some software companies will be challenged by AI. Probably not this year, next year, the year after, but disproving the long-term negative is going to be really hard for certain companies. But on the other side, there's companies like Snowflake where AI and data is like peanut butter and jelly.